We're a little more than 2 hours into trading. It is Monday, May 10th. Hello, traders. Let's take a look at last Friday's pick. Take a look at the market. Let's find some trades for today. Google was the stock that I highlighted Friday. It has been strong relative to tech stocks. We had a bullish flag formation with a breakout here. We had a really strong market backdrop on Friday on the heels of that weak jobs report. But you can see how Google has pulled back today along with the tech sector. So if you were in this play, you had to get out. You can see how it's filled in the gap from last Friday. And that opening right there was below the low from Friday. You've got to get out. So the entire tech sector is taking some heat today. Let's take a look at the market and see what it's doing. Lots of dojis here. The open is very near to the closing price. Tiny bodied candles. A price compression taking place. Put up the 1.0 indicator for squeeze, and you can see yellow dots indicate that the S&P 500 is in a squeeze formation. The problem with this is that we have had every shred of fantastic news that we possibly could get. We had earnings, gangbuster earnings. We have not seen this level of beats in over a decade. Strong economic numbers, ISM manufacturing, ISM services, ADP. The exception to that was the jobs report on Friday. I'm not going to put a lot of weight into that number. Analysts were looking for about 1 million new jobs in April. Initial jobless claims have been declining each week. ADP report was super strong. I just don't think that the government has good numbers, and I expect to see revisions. And by the way, if you think that the government is incapable of putting out bad numbers, you need to go back and take a look at previous unemployment reports because they are revised all the time, and these are major revisions. ADP, on the other hand, they process payrolls for small and medium-sized businesses. They know exactly how many checks they cut. So there's no monkeying around with the numbers. Plain vanilla, I always go off of the ADP report. So on Friday, we get this market rally and then absolutely nothing. We get a breakout to a new all-time high. If you did not trade in the first 30, 40 minutes of the day, this is what the market did the rest of the day. A whole lot of nothing. So if this were a go-go powerful market breakout, you would have seen follow through on Friday. You would have seen follow through today. We didn't see that. That's telling me that sellers are engaged. There is heavy selling pressure. Some of the air is going to get let out of the balloon now that mega cap tech stocks have reported earnings. We also don't have a lot of economic news pending right now. Those big releases, they happened last week. The FOMC meeting, we had that a week ago. That news is also filtered through the market. Very dovish FOMC statement saying we are not going to raise rates. I think that the headwinds are blowing. I want to take a quick look at TLT. This is something that you need to keep your eyes on. You can see how TLT has been moving lower. That means that interest rates are moving higher. I believe that we could start to see some issues with inflation. Yes, the Fed said that they are expecting inflation. This is nothing new. However, I think it could be a little hotter than they are expecting. And this is not simply a demand-driven increase in prices. If it were, that would be fantastic because it means that all of the price increases are because the demand is so robust. Unfortunately, there are a ton of supply issues taking place right now. Oil, energy. Once you cap a well, it takes a very long time to get that production back online. We also had a hack in the Northeast on one of the major pipelines. That's shooting oil prices higher today as well. Lumber, they did not produce enough lumber. Lumber prices are up about 215% in just the last couple of months. That is going to delay some projects because home builders and anyone looking to do home improvement, they're going to hold off on those projects. Also, if you looked at the hourly wage component of the unemployment report last Friday, wages up 0.7%. That's a big increase. So a lot of these supply disruptions are taking place. Containers, shippers can't find any containers to ship product in. And I know that China is scrambling to find these containers, so container prices are way high. You had the shutdown of the Suez Canal. All of these things are adding up, but they are supply shortages rather than being demand driven shortages. Plus, we've got the coronavirus really being a problem globally. Domestically, everything is fine. States are reopening, but on a global basis, we've got the State Department issuing a do not fly warning for 80% of the world. It's going to take a long time for global economic conditions to recover. So, even though everything here in the States is coming up roses, there's a reason that the market is not blowing through the all-time high on the heels of good news. And that really is the bottom line. When the market cannot rally on the heels of fantastic news, and it doesn't get any better than this, that tells you that there is selling pressure. By the way, iron ore futures up limit in China overnight. So they had to shut that trading down. Prices are starting to climb. That is going to be a pretty dang stiff headwind for the market. You can see we've done a whole lot of nothing today. We flatlined, we had a little bit of dip, made a new low for the day, bounced right back, and we are still compressing. I believe that's what the market is going to do for the next couple of weeks. We are in a lull as far as any types of news events, earnings season winding down, not a lot of economic news coming out, so there's no real driver for the market. And I feel that the market needs to just bide some time here so that stocks can grow into their valuations. While we're doing that, is there a chance for a market dip? Yeah, there absolutely is. After an 8% run in a month, there's a lot of bullish speculation out there. So I believe that, yes, waiting on the sidelines for swing trading is the best thing you can do right now. Option implied volatilities are near historic lows. So if you're going to be a seller of premium, you got to go almost right at the money to get any kind of credit. And one tiny little market whiff could send those positions in the money. That's not good. Well, then it must be a premium buyer's market. Well, yes, it is because option implied volatilities are low, but you have no tailwind. The market is not going anywhere. You can find some asset rotation within the sectors. That's what we've been doing on a day trading basis. You know that because that's the strategy I've been highlighting for the last 2 or 3 weeks. So let me emphasize this one more time. We're going to be looking at bearish trades today for day trading. Day trading. I don't want to take bearish positions overnight because the market is in a 12-month bull rally, a very strong 12-month bull rally. Great way to lose money very quickly is to pick market tops. Intraday, we absolutely can take advantage of that momentum, be in the trade, and be out of the trade. So let's take a look at a search. You know that I like my pop bear search. I'm just going to click through a few of these and tell you the types of patterns that I'm looking for. That's nice. A breakdown through horizontal support. You see your earnings before the open there. So the stock is cracking down. Yep, that's a nice short PDD. That's nice. You've got a horizontal breach of support. You also have a breach of the 200-day moving average. Nice solid downward sloping trend line. PDD looks great. Let's keep going down the list. You know that Pop Bull is my favorite bullish swing trading search. It would stand to reason that Pop Bear is my favorite swing trading bear search. So we're going to use that to see if we can find some trades below the 200-day moving average, trying to break horizontal support there. I've got some other stocks that I want to highlight, so I'm just going to click through these and we'll take a look. So I don't like VRM, for instance, for a short. Yes, you got nice upward sloping trend line, a breach here of the 100-day and 50-day moving average, but I'd rather see something that's been rolling over and trickling lower as opposed to something that has had a pretty decent bid in here recently. So let's keep taking a look, and I'm going to go into my heavy selling search. It's a day trading search, and we're going to take a look at the candidates that we have there. So I know I'm going to be able to find some nice ones. Amazon, trying to test those major moving averages. Keep an eye on that one. Facebook looked really weak. You've got a breakout right here that should be support, was resistance, now support, test, 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 fail. Facebook's looking pretty weak in here. Going to continue to go down. Qualcomm. Now this stock has had some weakness. Upward sloping trend line. I would not connect the low from that bar right there because I want my trend line to go through as many points as it possibly can. And it mirrors that 200-day moving average pretty closely. Qualcomm looks like an excellent short today. That is a nice breakdown below the 200-day moving average. Take a look at the action right now. This is going to be your pick of the day. I just decided that. Why? Because look at the market. These are the last 5 bars of the S&P 500. Whoop, excuse me, I'm on the wrong chart here. But they still look similar. Look what the S&P 500 has done over the course of the last hour. Up, 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 grinding higher. What has Qualcomm done? Nothing. It can't get off the deck. After that early selling right there, it cannot get off the deck. That tells you that sellers are selling, 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 selling. They're keeping the pressure on. So this market bounce, typically you would see a bounce in the stock, not happening. That tells me that Qualcomm is under pressure and it's going to continue to move lower. Now it can be a pretty choppy stock, so do you have to short it right here? What I would do is I'd draw an upward sloping trend line in here, place your alert, and if you get a nice big rally like we're getting in the market, and you get 1 OP coming up here, this is our proprietary indicator, and you get a bearish cross, that is when you would want to start watching Qualcomm. Watch for that relative weakness. Watch for that breakdown there. That, excuse me, then you can short Qualcomm. Qualcomm probably works overnight as well. For your shorts, you want to stick with the tech sector. That is what is weakest right now. BYND looks like a good short. You can see earnings after the close here. Stock sells off. There's major horizontal support. 1, 2, 3. Now we're breaking below major horizontal support after an earnings release. That stock looks like an excellent short as well. Baidu, testing that 200-day moving average. If it closes below the 200-day moving average, that's a good short. Baba, breaking horizontal support right there. It's got a little bit of support down in here as well. Down below all the major moving averages, very weak stock. MU, horizontal support, 1, 2, 3, 4 touches in there below the 100-day moving average. MU looks very weak as well. I've given you a bunch of shorts that you can consider today. Out of them, I would say that Qualcomm is my favorite because I believe that Qualcomm doesn't just look good for a day trading short. I think it's one that's going to perform for you tomorrow and the next day. But I would do it as a day trade just because the market has been so strong. I'm not expecting the market to go anywhere. Look at how flat it is right here. If it couldn't do anything last week on major news, it's not going to do anything this week in the absence of news. In fact, a really big tell for me was Friday. You had this jobs report that missed by a wide, wide margin. That is a major piece of news. Well, what happened to the volume Friday? Friday, the volume was down for the NYSE by 20% from the 90-day average daily volume. So on massive news, on a huge miss, and a new market high, volume down 20%. That is a sign to all of you and a warning that you do not need to chase this market rally. You will have plenty of opportunities to get long, and if you're patient, you might even get a pullback. A dip would be an excellent entry point for long positions. So right now, this is a low probability trading environment. I believe that we are going to transition from this upward sloping channel into more of a horizontal trading range, and we're probably going to spend some time going sideways for the next few weeks. So that means be patient, trim your size, trim your trade count, low probability trading environment. I know this is not what you want to hear. This is not what any trader wants to hear, but you've got to be able to put the current price action into the longer term context of what's going on. And everything right now tells me that we're going to be pretty dull over the course of the next couple of weeks. Thanks so much for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.